Hi, welcome to this video day, which is on the 15th of May. We're on Monday. In today's video, we're going to give our updated outlook and forecast for Euro JPY. We'll be going over the trade setup in just a moment. We're going to be looking at the big fundamentals behind the chart, the sentiment towards the pair, and finally the key technical levels. Now, in terms of the Euro, it had a big run up on the JPY. We've since seen a correction. Are we going to see more downside, or will the euro push to the upside? Our view is the euro has limited upside and plenty of downside. We're going to go through the logic of our view now. Just going to go over and look at the setup. Just before we do so, though, if you want to learn our trading strategy, check out our daily technical sentiment analysis of 14 FX pairs, including Euro JPY. All you need to do, go to the link beneath this video. You'll get limited live access to our member center, and also for a limited period, discount on your membership fee. You can also join our free mailing list, follow our Facebook page, and finally join our Facebook group of traders as well. Right, let's take a look at the trade setup. All right, before we go to the daily chart, I've brought up a monthly chart. I've already drawn the levels of support and resistance as I see them in. Now, in terms over on the left, you will see a double top in 2015, came up to test it here, then we dip down, speculators go heavily long, we'll look at how long they are in a moment, and push us through 148. We top out above 150 on this candle here, and we're presently below just the 148 level. So 148 and 150 are significant levels of resistance on the upside, and 140 significant support on the downside. Now, in terms of Euro JPY, if we look from here, it has been a big uptrend. Okay, you got quite scrappy price action with big blue and big red candles and lots of tails. But the Euro, an uptrend, I think it's about to end. That's to do with the bullish extreme and how speculators are positioned. Now I want to discuss this in more detail. Now we can shift over to the daily chart. All right, Euro JPY daily chart. Euro big move up, and then we've seen some corrective action. I'll do my levels of entry, stop and target in a moment. If we run onto the upside, it's a sell on weakness, or if we break lower. So you can enter the trade in two ways if you're bearish of Euro JPY. Go through the levels in a bit, but what I want to do is go through these points and show you some charts as well in relation to the bullish extreme that exists in this pair. Now, in terms of the fundamentals, Bank of Japan is on hold in terms of interest rates. They have low interest rates anyway. The market sees them being low for the foreseeable future. That's discounted by the market. I personally don't think that will change. Now, in terms of Euro JPY going lower, you have to look at the Euro fundamentals and obviously speculative positioning. Now, the markets is seeing a hawkish ECB going forward and an economy avoiding recession. The economy is already in danger of recession due to what the ECB have done already. A recession will be guaranteed if they continue to raise rates. The market's looking for 2 or 3 more rate hikes. Okay, so this view here for us doesn't add up. I think the ECB will be a little bit more cautious going forward. We'll look at some charts in relation to the Eurozone economy, and you'll see why they might not be as hawkish as the market expects. So this view here, in our view, is not going to come to fruition. Speculators have gone heavily long of the euro on this. Okay, good news is in for the euro on rates and the economy. We could get risk off, which would be a plus for the yen. The yen is more of a safe haven than the euro, but because speculative positioning is so extreme, it points to limited upside and good downside in our view. So I just want to look at some charts. All right, in terms of the health of the Eurozone economy, this is a chart from BBG's Simon White showing economic lead indicators in blue, Eurozone industrial production in white. It says here, Europe unlikely to dodge a recession. And what you can see is basically the blue line leading indicators has collapsed. Industrial production should basically play catch up. But actually today we did have Eurozone industrial output, falls the most since 2020. A significant decline of 4.1% month over month in March 2023. Larger, where is it? Larger than the market consensus, which anticipated a 2.5% decrease. So the market is just looking for Eurozone to avoid recession. It just won't, in our view. Data keeps missing forecast in Eurozone. It's just not industrial production. Anyway, back to these charts. This is Euro economic surprises, i.e. how much the data misses forecast or is above forecast. It's against the US here, but you can see Eurozone data has just been missing forecasts. We're bearish of Euro USD as well. Obviously everything goes through the cross, so everything goes through the majors, i.e. the cross. So if Euro USD falls, we're looking for it to fall more than USD JPY. Back to the economy itself. Contracting money supply bodes ill for economic expansion. You can see money growth has collapsed in Eurozone, and this chart here, loan growth has largely stopped in Eurozone. I think the loans in Eurozone being granted are the least since 2011. That's because of a hawkish ECB. It's biting industry. So it's not looking great in Eurozone. European retail sales as well. The consumer is not happy. The energy crunch was avoided, but it says here consumers ain't looking good. It's basically falling retail sales. There is pressure on industry and the consumer in Eurozone. Right, let's go and look at speculative positioning. Now, in terms of our favourite sentiment tool, it's the COT Net Traders positions. COT Net Traders positions are released by the CFTC each week. They are real money positions on the Chicago Mercantile Exchange. It's a significant portion of the Forex market. So it kind of acts like a poll of what is going on overall in the market. So I'm just going to explain briefly how this spreadsheet works. Non-commercials on the left, they are speculators, large speculators, hedge funds, etc. Other side, commercials, they are hedgers. Okay, in short, what we want is to see speculators really long and commercials to go against them. Commercials are hedgers. They don't make or lose any money. They're only going to move their hedges aggressively if they think prices have moved too far from fair value. Okay, now in terms of from the CFTC, you can only get the data for the majors, but you can make the cross up, of course, because Euro USD, you can look up what the positioning is here. I'll explain how the positioning is worked out in a moment. Look at USD JPY, do the data together, you come up with the cross. Now what we do is we just do it as a simple ratio of longs to shorts. Okay, so in terms of Euro JPY, speculators, non-commercials hold 7-1 in terms of their longs over their shorts. That is elevated in historical terms. Commercials now starting to go against them, 3.6-1 in terms of shorts over longs. If we add the two together, we get the divergence of 10.5. In terms of this spreadsheet, when we get a divergence above 10, we will normally be really interested in the pair for a reversal. Now, hopefully that brief explanation of the COT is clear. If it isn't, or you want more information on the COT, just go to our video, COT Net Traders Indicator. Right, let's go back to the chart and do levels of entry, stop and target. Right, let's do some levels of entry, stop and target. Before I do that, I just want to stress the importance of the 20-day moving average in our view. Regular viewers will know we pay attention to it and use it very often as an extra trend line. Now you can see where the euro comes up here, you've got that big blue candle I'm highlighting, takes out the 20-day moving average, then we dip to it. One dip there, slightly through there, but we bounce back up. We don't touch the 20-day moving average. Then we come down, we hold it on a close basis there, hold it there on the tail, hold it there on the tail. Then we finally come through and close beneath it on this candle. And in a big strong uptrend, the 20-day moving average will tend to act as support. Once it's given way, we'll look for it to be a level of resistance, okay? And it's vice versa in an uptrend, okay, for us. So I'm going to say the two bodies there and today's tail obviously lines up the 20-day moving average. Draw another line there. Actually, probably don't need the trajectory. I've drawn it in anyway. That's where you briefly get through it there. Down, resistance, resistance, and now hopefully resistance again. If you want to come in short, go through the round number. 147 is a round number. Wait for these bodies to give way. I don't know if I just said it. Always a lot of order flow around round numbers, so you just want a little bit of clearance. So I'm going to say 146.80. Stop just back from the double trend line. 148.40, and then look for a move to the downside. 140 was the level we saw in the monthly chart. On the daily chart, I'd probably look for this level here. Okay, where the uptrend basically kind of started, the recent uptrend. Exhaustion, blue, and then off we go. So 141, 140.70. It's about, what is it? Near enough 4-1 in terms of risk reward and break lower. And there's a lot of speculators long. So if we do break lower, more stops could be hit. I think some have been hit in this period, but we're still elevated in terms of longs. Get a nice red through this level. You can just trail your stop down. Okay, so that's if we break lower. Always the chance we might break higher. What would we do? Well, if we broke above this level here, we'd just sell back through the level. So if we pushed on up, sell through that level, you could wait for the round number to actually give way, and then the stop back behind the next round number. Okay, so went into that zone, you just sell. Okay, what about if it got through 149? I don't think it will, but it could, of course. Just sell back through 149. Stop behind 150. So you just literally will play round numbers. Well, through one, back through it, through another, back through it, and then stop back behind the next round number up. I personally don't think there's enough buying power on the sidelines to push the euro significantly higher. Okay. Of course, anything can happen in FX, but yeah, we've seen a reasonable breakdown. Looking for more downside. Any rallies to fail. Right, that is the video for today. Thank you for watching.